created. So if I get rid of that, if you literally see that, and that's your candle close, this is your imbalance right here. That there is fine to enter off of. It's very big on imbalance, but looking at where, what price did, you could have easily taken a fill entry right here, stop below there, aggressive, even just to go to there is a 3-to-1. You could have easily taken price. So, James, the perfect answer to that is this happened. So the perfect and most beautiful thing about price action is it's fractal. It happens on every single time frame. Okay, this is for the people obviously looking to trade on the smaller time frames, but you can absolutely do this on the higher time frames. And I'll try and find you some examples as well. So if you're at work and you haven't got access, why not enter on the upper IC candle? Which one are you talking about? So, looking at the higher time frames, 1 hour time frame, like I've said there, that there pushes higher in that your accumulation is technically there. There's a really good entry right here. This is just if you want to really scale it up on the 1 minute to go higher. So if you really clean it up, you've reacted here and price is here. That there's a 1 hour entry. You've got 1 to 2 hours at 3 o'clock. Now, obviously, it depends the hours you work and things like that. But there's absolutely nothing wrong with trading on 4 hour, 1 hour, 2 hour. 15-minute will give you the solid entries. So, for example, it's happening right here. So we can see prices obviously coming into this area here. Price aggressively moves higher, fills in this imbalance right here. That there's a decent enough entry, and that then gives you a couple of hours to get into it as well. So there's plenty of opportunity. If you're working full time and you can't look at the charts all day every day, I would just say focus on the 15-minute and above. Play everything in line with the daily candle, work along the daily candle only. So right now you wouldn't be looking to do anything until price is in your daily area. So look at it. I've been waiting for price to come here. And then I want to see, price react on a smaller time frame. You can easily set a pending and walk away. And there's nothing wrong with that at all. And what I would even do then, if you're looking to take trades on a higher time frame, I'd probably bring the risk up a little bit. I'd bring it up to 2% because you're not taking as many trades. So you don't have to bring your risk down. And if you get a 2% risk and you lose 2%, you lose 2%. But if you win that 5-to-1 on a 2% risk trade, you're up 10% for the week. So you can really refine your trade entries. And again, we're in the modules, in the trading, we've got different categories for short-term entry and long-term entry as well. So it's catered for people that want to swing trade and want to trade with the higher time frames. So please don't think you're alone if you're trading on the higher time frames or anything like that, guys. Okay, so hopefully that's that. So looking at gold, I mean, gold looks like to me at the moment it is just taking out both sides of this ugly range right here. So we can see price moves higher, price moves lower. I'd be potentially waiting. This could easily be a liquidity grab. So now I'd be waiting to see what happens at this candle, because we've taken both sides out, we've respected it, and we're now pushing higher. So this here is your area where you would anticipate accumulation. We have just about on the 1 hour got it. So what I would hope for is a really slow Asian session, go down to a smaller time frame. Potentially, I mean, the only issue is it looks balanced. What I mean when I say price action looks balanced, it's there's not really anything aggressive happening in here. So it's, price is pushed up, mitigated in, price is pushed up, mitigated in, price is pushed up, mitigated in. So realistically, for me, it's either going to carry on pushing or it will just plummet to the ground and take all of this out, because it doesn't really look that attractive. It's setting itself up for the Asian session, basically. But are there any charts that anyone wants me to look at, guys? And I'm happy to obviously go over things. But, whilst you're waiting for the content on the course, get used to just really knowing what an FU candle is and an IC candle is. An FU candle, this one here, took out liquidity. You know, that candle here is an institutional candle because it did not take out liquidity, but they still mean the same thing. They're the last candle before price moves higher. So right now on US 30, I'd be looking at this range right here, measuring the range. We're in our discount level. That's fine. 1 minute time frame. You want to be looking for price, or a 5 minute time frame. You know, you want to be looking for price to come to this area here. This is an order block. And, you know, I want price to travel down and then do that. Ideally, that happens in the London session. But, you know, this can happen on a 15 minute, a 1 hour, anything. You know, like we said, we've got perfect accumulation on US 30 on the 1 hour. But I think the most important thing, guys, is focus on 1 or 2 pairs, no more than 2, because otherwise you are just going to get lost in the source. You know, it's all about looking at price action going higher, because if you miss the move down here, you can get it on the way up as well. There are areas you can do, and it's all about focusing on liquidity grabs. So if I draw it out just to try and make it a little bit more simple, let's say, you know, price is moving lower, and then you've got this entry. Here's the entry right here. Now, if price is obviously pushing higher, you're going to see this on the 1 minute. Okay, if you start seeing this kind of thing, and then a little liquidity grab, and then a push to the upside, and then you see imbalance in here, take that entry. As long as your target is still here, you can take that entry. And even though you're at the top of the trading range, it's just a clever way to scale. And you can do this on a higher time frame as well. You know, this is the beautiful thing about trading. Price is fractal. There's nothing stopping you doing on a hard time frame. You know, even here, you could have just set an entry at this 1 hour candle, but what you got, you waited for your accumulation. We had it, and it's the entry. So it's perfect. You know, even right here, 1 hour time frame, we can see this imbalance is created, push to the upside. You know, get rid of that for a second. What did price do here? You know, we're making highs, and what we're doing, we're retracing in this imbalance, aggressive push higher. There's your imbalance, which has been left. Your entry is literally order block and imbalance right there. If you're holding that now, you are up nearly a 4-to-1. If price moves into your area where discount and imbalances overlap, is that indicates a strong entry point. So this area here, if the imbalance overlaps with the order block, that's exactly why I played that 1 minute time frame wherever it was. If we look for it, so the reason, if ever, where is it? Was it on NAS? I can't remember where it is, but essentially, yeah. If you, I'll draw it out. So it's more simple. So basically, when price is moving higher, if we break, and this is your order block here, if the imbalance is with the order block, so that there is imbalance, and let's just say that there is your order block. If that lines in, that's the perfect entry for a sell. So it's just giving you confirmation that, you know, the imbalance, it's in the order block. It's going to come back to the order block and actually take you in for a sell, because the imbalance is a magnet. So your entry is always at the open of the IC or the FU, or other than the imbalance. So my entry, was it NAS? It was NAS, wasn't it? So yeah, my entry is it's usually imbalance with order blocks, essentially imbalance with order blocks. So I really need to find this. Here we are. Perfect example. Okay, 1, 2 big moves down, liquidity grab right there at the open. This is the New York Open. This is when the volatility kicks in. Price has pushed to the upside. We've got a break of structure. Now you can wait for a couple of things in here. You can wait for price to come down lower and be super patient. But when you've got this imbalance, that there is a sign that you are going to get rejection. And you can backtest this, guys. Backtest this and look at the imbalance. It usually plays off the first imbalance and it reacts. But the reason I got out just above this high here So my entry was at the bottom of the imbalance. My stop loss was on the bottom of that candle, and I literally took it here for a 3-to-1. The risk reward ratio is on, and the reason I got out is because price can come lower, but I wanted to get into this trade because I knew price was going to react in here. And the reason this imbalance is a magnet is because it's supported by the order block. But also, when I was looking lower, I couldn't really see any imbalances. You got maybe a little bit there with this candle here. I don't think price ever even came back, or it did. Look at that. Stunning. You know, it didn't quite come back to the pip, but if you wanted to wait, you could have waited for price to come back down there. And then if you miss the time, if you miss the entry here, this area here, this entire move down. So the imbalance will be taken first before the IC candle. Yeah, so essentially, James, you're going to get a reaction off of the imbalance. I'm going to show you a load of examples, and the course is going to go over all of this in great detail. So you trust me, once you see it and spot it, it'll be impossible to unsee it. It's just institutional order flow. This is exactly what price does. It rejects, takes out new highs. If it comes down lower, it's because it obviously wants to mitigate in there, you know, but because we had a target, short-term target, we took it. You know, price came down, that was the entry that got us in. It doesn't always work out. Sometimes it will, you know, completely smash through your stop and go there and then push higher. And, you know, if that happens, that's okay. You know, we know we're going to lose trades. If there is a series of imbalance, which one do we consider? The first one. The first one. Okay, so if there was loads of imbalances, I don't know if I'd have taken this trade. But because there was one imbalance, this was the perfect magnet for price to go higher. You know, but typically if there's one or two, so if there was one here and there's one down here, I'm still taking this one. But if there's one there, one there, one there, I'm not doing it. You know, it's too much. But if you see what happened with price after this, we reacted, you know, we didn't quite come down, but again, hopefully you can get yourself in on spread and things like that. You know, if you miss this entry here, you've got this area here is your order block. And this is all of this move, the entire down move, because that there, as much as it's trending down, you go up a time frame and it looks more like an order block. So you can see there, 1, 2 candles, that's actually an order block. Then you go back down to your 1 minute where we reacted. What happened? Price is moving higher. Price is pushing higher. What does it leave? A little bit of imbalance. Right there. There's your entry. You could enter there. Now, price is obviously pushed higher and higher and higher now. What does it do here? Imbalance. Reacts. Fills. Now, you might have been stopped. You would have been stopped out. You maybe have, you know, there's imbalance here as well, which we can, you know, you can see you pushed into. But even then, you know, if you took this entry here and you just took it to this high, and then you saw this imbalance being tapped in, you could have taken it to the next high, and you can literally follow price up. But it gets a bit choppy when price is you know, moving the wrong way. You know, seeing here, price aggressively moves, a nice rejection, price break structure, comes higher. What does it feel? Look at that. I mean, how beautiful is that? Right there. You know, price is pushing higher. What happens here? I mean, this just happens all the time. Price pushes higher, order block, within the order block, imbalance. It's not obvious, but we fill it. We come in, we push higher. If you miss it, you've got this entry here. Price is pushing higher. There's an entry there. This happens on the higher time frames as well, not just the 1 minute. But look at the entries you've potentially got access to. This is what I say when, you know, when you do get to full time and you do get funded and things like that, play with one time frame, because you could go 1, 2, 3, 4, 5, 6. You get 6 trades that are all coming in, maybe 1 or 2 lost, even 4 wins. You know, you could really scale up here. You know, if that's only if you miss the one at the bottom. You know, we saw price happening down here. If you got in that one, you have no need to bother what's going on here. You can walk away. You've got your stop loss at break even, whatever, you're sorted. But looking at what price is doing, this is just if you miss it. It sometimes taps it, it sometimes fills it. You know, we saw that price here, you know, that was a little tap. This one here was filled completely. You know, I think the one I waited for was a complete fill, and I actually got in when it filled it, because if you got in there, the risk reward ratio wasn't actually on. You know, that one there got filled. That one was tapped. So it's James